Success is no accident. It's hard work, perseverance, learning, studying, sacrifice, and most of all, love of what you are doing or learning to do. Pele. My friends, each and every day, 10 to 15 minutes. I hope you love this time as much as I do. I love the stock market. I love everything about it. I love the challenges. I love winning. I love learning, when I do lose, a more valuable lesson than what I lost. Because again, the key, number one rule, limit your losses. First loss is your best loss. Don't lose money. Second rule, don't lose money. Third rule, make money. Let's jump into these charts. We are short on the S&P 500, the NASDAQ 100. As we look at where we are on TLT, we've got a 70% long on that. We've got a 68% long on gold and short on HODL. Let's take a look at where these charts are taking us. S&P 500, we told you yesterday. In fact, we said our two biggest positions were down moves continued on the S&P and the NASDAQ. And of course, that is what happened, down 1.33% on the S&P, 1.80% on the NASDAQ. And you might say, how do you make money when the market goes down? Well, you can, of course, short the market. You can buy puts, or on these two funds, the S&P 500 and the NASDAQ 100, we have two simple inverse funds we love. One is SH. That is the single short managed by ProShares of the S&P 500. Now, again, we've got great training on inverse funds, all the problems with them, all the good things about them. Have higher fees, they're recalculated daily, it can magnify your losses, all sorts of stuff. That's why you practice this stuff before you ever throw real money into it. And PSQ, and that is the ProShares single short. There's all sorts of other things that you can do. You can get into these, 2 times, 3 times, whatever they are, inverses, crazy stuff. We don't do that. We're just looking for a way to make money when the market crashes, and we want you to practice trade that. See if you like it. If you like it, try it. If you don't. Just let the market go down and buy back in when it's going up in your practice trades. We always throw that in. We're not a stock calling service. We're an education firm. We want you to practice the charts with us. And again, things moving in the right direction. Where are we now? Well, the market closed at 551.42. And again, things moving down, looking good as it continues to move down. We see support now around the 520 mark, resistance at the 580 mark. As we look at our aggressive entry point, we see that at about where we are right now. Our strict entry point, we're looking at that at somewhere around the level of about 560. That's a ways to go. In fact, if we have some kind of pushback on that, just with the dropping that we see there, again, safer to see a pullback up to the 560 mark and then a renewed down plunge. That is something you can look for. Of course, if you're in this and you're letting it ride, we're showing our back test for the aggressive entry point at about 62%, at the strict entry point about 68%. And again, as we move from before I leave the S&P, I just want to show you, of course, this, we finished off the 2-day candle, reached a little bit of a lower low, decent volume there. If you look at the volume here over the course of the last day and a half, yesterday afternoon and today, you can see we haven't had a lot of volume. We had things drop further. Volume has slowed down. Decent volume on the weekly. We're already above the average volume. It's not been average for the last 2 weeks prior. And of course, decent volume. We'll see if we get up to where last week was. Look at that big red down candle. Short has been going well. We look at the NASDAQ. And again, we see some similar things. Decent volume on the 2-day. Again, looks like we reached a little bit lower low. Let's look there. The low prior, 267.01, 266.43, yes. And of course, big down week, and the volume, again, low the last day and a half on the Q. So do pay attention to that. We pay attention to that in our calculations. On the NASDAQ, we're at about a 60% continued probability of short. We've got support around the 440 mark. We closed at 468. We see resistance at 520. And again, our aggressive entry points around about where things are right now. Just a little bit higher, 469. Strict entry points right around the 500 mark in case there's a pullback to some resistance and then things falling back over. We see $35.34 is our expected move. Our back test accuracy is at 58% on the aggressive, 65% on the strict. So we'll continue to watch as things develop on these charts when it comes to stocks. Now, what about bonds? We are currently, as we look at bonds, we have a green spinning top right there. And that green spinning top again shows us that we've had things level off. We did pop up for the day as opposed to what we've done the last 2 days, or 2.5 days, because we popped up in the afternoon looking at our Heikin-Ashi candlestick. We also had a little more volume than we have in the that was in the last 2 days. This fourth day of the half day, fourth candle of the half day candles over the last 2 days was one popping up and hitting the trend line. We can see on the 2 day as we've got that wick on the bottom that developed, and we just have a red down candle, little one sitting right there on the weekly trend line. Again, our odds are changing a little bit to about the 65%, 70% long. And again, I'm just not feeling it, even though I'm looking at the numbers. We see support at 87.50, resistance at 95.58. Aggressive entry point is right around where we are. Strict entry point, again, is letting it gain some and move up to the 93.34, which is probably a good caution. And the backtest accuracy is telling us it's at 72%. I'm just having a hard time feeling that. But, you know, we'll see how things play out there. The strict backtest accuracy is around 75%. And again, we'll wait, watch, and see. The numbers surprise me as we do the calculations. And that, I guess, is because of the pull-up during the day. But again, with all this downward pressure, I'm just not seeing that. But again, that's the human element as you put things in and just don't go strictly by the numbers. What's up with gold? Well, gold is about a 68% long on it. You know, it's taken gold a while to catch some fire. It caught fire over the last 3 days as it slowly started etching up and really popped up today. And of course, we can see where on the half-day chart popped nicely above that prior high level. We see it on the 2-day also. You can see it on the weekly. Already up to average volume and have one more day to go. Nice high candle. First highest candle we've seen going back many, many months as far as volume goes on the 2-day chart. So that is beautiful. Big volume in the morning, average in the afternoon. So gold is definitely going in the right direction. We see support at the 260 mark. We see resistance 280 mark. We see the aggressive entry point at about where we are right now. Strict entry point around the 271.84. I guess that's going to be on a pullback. And again, expected move around $10, 70% back check accuracy on the aggressive, 73% on the strict. So again, looking for gold to continue going long. We were long on it yesterday, not really firm long at about 55%. That's gone up 13% since yesterday. So we'll keep our eye on gold as that precious metal shines. What do we see on HODL? We are short on that 55%. We were at 50% yesterday for our directional probability. We see support at $20. We're currently at $22.68. And we see resistance at $28. We see an aggressive entry point at where we are now. Strict entry point around the $24.66 on a pull back. And we'll see what happens there. About a minus 4.10 expected move. And again, the back check accuracy is not that high. 53% for the aggressive, 60% for the strict. And again, Bitcoin, though, has just been continuing to move back, move back, move back. Volume's been decreasing on that weekly chart over the last few weeks. You can see how volume's been low on the 2-day chart from the 28th of February onward. And again, you can see how Bitcoin has been, just ticking down, popping up, ticking back down, popping up, ticking back down. Downward pressure continues there on Bitcoin. That is where we are, my friends. Patreon members already posted for you the weekly vertical crossovers. The Patreon page will be emailing that out to you also. But remember, if you don't see the email, if it goes into your spam box or for some reason you don't get it, it will always show up at the Patreon site first. God bless, my friends. All the best from Charting Well.